How's it going, everybody? My name is Antonio, and I am on the barbecue today with Doug Eaton, who is the CEO of Strategic Metals. Who's not here with us today, though, is your financial advisor. This is going to be a conversation between just two people on the internet that, for all you know, could be aliens in these times specifically. So it's most likely to be a general and impersonal conversation, and especially one that will contain a lot of forward-looking statements, guesses, assumptions, and just general hopes for the future, if we will. And what that means for you as a listener is that you should only make investment decisions based on this conversation if you like losing money, because the mineral exploration space is among the most risky subparts of the stock market. So you should not only proceed with an understanding thereof, but also proceed with caution. More specifically, that means that you should do a lot more research and talk to a professional investment advisor, and in the end, take your own decisions like a grown person. More information about the company can and should be found really on setter.com, where you will find the official finding documents for Strategic Metals. So once again, proceed with caution, and please read the full disclaimers that are on your screen right now. That all said, Strategic Metals is about a $25 million company right now. There's about 111 million shares outstanding, which makes it a 22.5-cent stock at the time of recording of this video. There's no warrants. There's about 9.5 million options outstanding, but again, no warrants, which was interesting to me. This is, well, I guess technically it's a project generator company, but this is not your typical project generator company, at least not anymore. And they do focus on early stage exploration projects that are that they then, they would buy them, they would explore them, or maybe joint venture them, or option them out, or maybe sell it to interest parties, while also sometimes retaining a net smelter royalty in some of these projects. So that may sound like a broad strategy, and it is, because they currently are sitting on 96 wholly owned mineral projects spread across 12,000 claims, and they're all located through Canada. So you think the Yukon, think BC, and think even the forgotten Northwestern Territories. Those projects all have kind of I guess different metals, not all of them, of course, but pretty much all the metals that you can think of, this company has somewhere under its belt. And there's also a big diversity in deposit types that they're chasing. So well, obviously I'm not going to go through all of them at once, at least not here, but we might end up talking about some of them. The company also has a growing royalty portfolio. As I said, this is not your typical project generator, because they have no fewer than 12 NSR projects. They have multiple projects under option, as I said, and also a few in joint venture. And they also own shares of other companies. There are a few companies in further stages, advanced stage companies like Broden Mining, for example. They have GGL, they have Rockhaven, they have Precipitate Gold, and a few others that, if you count them all up together, they have a total value of about $35.5 million, or at least they had that on July 14 this year. So it's pretty much, well, not pretty much, it is more than the market cap of this company. And if you add the about maybe $2.5 million by now to that, it is that this company is trading below its working capital right now. Major shareholders of Strategic are well, management itself at about 8.5%, Condor Resources at over 17%, the Sprott Fund, that will be the SGDLX, if I'm not mistaken, they own about 9%. And then we also have Ruffer, which is a London-based fund, which owns about 10% of the company. Company's been around for almost 20 years now, and it has returned about $20 million to shareholders in the process. Well, actually, a little bit more than 20 years now, but by this point, I guess. So yeah, I guess this sums up the basics, and it's probably a good time for me to shut up here and welcome their CEO, Doug Eaton. Sir, thank you for investing your time in me.
Thank you, Antonio.
The pleasure is all mine, of course. What did I miss in the overview there?
I think it was a pretty succinct appraisal of what the company does. I appreciate your disclaimer at the start. That's the biggest problem with our sector. Is most companies in the sector are extremely high risk. Many tend to be short-lived because they're designed around a single project. When that project doesn't work out, they they either disappear or management disappears and the company is left as an orphan, or in some cases, they'll restructure and continue on. But that's, of course, destructive to shareholder value. We take a different tact on it. We try to run strategic as very much as a business. That involves a lot of risk management. That's why we're the project generator that we are. We like to move projects out to other companies when they're reaching the more advanced, more expensive stages of exploration. And when we do that, we want to make sure that we get some short-term rewards for our shareholders, typically looking to either get cash payments or shares in the whoever we sell or move the company to as an option. But as you mentioned, we will keep longer term benefits for the shareholders to make sure there's some blue skies. So in other words, if we option it out, we'll typically try to get a very large equity interest still in the project after the other company completes their earn-in. Or if we make an outright sale, we'll keep the shares in the other company or cash payments, but we'll also keep an NSR. So as you mentioned, right now we have 11 NSRs. We have a deal just waiting for final closure, and at that point we'll have another 12 of our projects will roll over and become NSRs as well. So the objective is to build a portfolio and maintain healthy working capital so we can continue to move forward on all fronts.
All right. Well, that makes sense. And especially when you say that most companies, I guess, out there mismanage their capital or don't know when to quit drilling and so on and so forth. But I guess that creates opportunities for you. Let's maybe kick it off from maybe not all the way from the top. But if I were listening or watching to this video and got interested by the overview, the first thing that I would do is just open up your chart, on which I would see a run from about 25 cents to then 40 cents, and I'll back down to 22 cents, all within less than 6 months. What's happening there with the share price? What's that action?
Okay, well, first of all, the long-term action is a gradual slide downward, and that reflects the general lack of interest in the sector. The last time we had really robust interest, and that was triggered by very high gold prices and a lot of interest in other commodities as we came out of the financial downturn in the early 2000s. We actually peaked at around $4. So there is the ability to move very strongly, and that peak was off of a bottom that was lower than where we are today. So the leverage is there if the market cooperates. The short-term spike you mentioned was I think in response to a rumor. We weren't promoting the stock or suggesting that people buy it. It was people who are anticipating a positive outcome. One of our projects, you mentioned Broden Mining. We own over 30% of that company. It's still private. It's working with a First Nation in Yukon, who, on their traditional territory, there's one of the most prospective mineral projects in Yukon. It was once the largest mine ever to operate in Yukon, represented 30 to 60% of Yukon's GDP when it was in production. It was one of the larger lead zinc mines in Canada. And Broden is working with the Ross River Dena Council to first acquire and then redevelop that project. Partners or the necessary signatories in it are Canada and the Yukon. They're both on side, but unfortunately there's one more signature that we need, and that's another First Nation in Yukon who has to sign off and approve the project. It's because the Faro mine site is in long-term reclamation by Canada, and there's a number of parties to that agreement, Selkirk being one. And if we can get Selkirk's signature, the other parties are already aligned to do it. I think it'll be a fantastic project for the company, a fantastic project for Ross River Dena Council, and a fantastic project for Yukon Territory. It's I think that potential to go back into production relatively quickly. It's going to require a new mill to be built, but that's actually good news because the old mill was not appropriate for the ores that are there now to be mined. It was some distance from where the current deposits are located. That district produced over half a billion pounds of 5 billion pounds of zinc during this previous production, and there's still over 5 billion pounds left in resources. There's 3.5 billion pounds of lead. There's 111 million ounces of silver and nearly 1 million ounces of gold. So it's a pretty substantial mineral resource. And Broden, I think, has done some very good work to get to where they are. We need that Selkirk signature to move ahead. And that spike was people anticipating that with a new band council with Selkirk that the deal would get signed quite quickly. Unfortunately, that was just before summer, and the First Nations tend to spend the summer on the land. They're out picking berries and hunting and fishing, so it's very hard to get them focused on business. So hopefully we'll get this resolved come fall, and that project will move forward. I think that very quickly after getting a signature, we'll be able to complete the additional signatures on the agreements, which are all negotiated between Canada and Broden and Ross River Dena Council. And I think that you'll see a go public event again fairly quickly after that. So it's just one of our many projects. If it's successful, if we're able to get that signature, I think that the value of that, our shares that we hold in Broden, would single-handedly exceed the value of our current market cap. So it's a pretty major transaction for us if it gets done. And I think somebody jumped the gun, thought it was a done deal, and that's why you saw that spike.
Okay, but that makes sense. That makes sense. It's a big statement, though, if that would single-handedly exceed your market cap. And I think you mentioning it here, this is just one of your projects. And I think the first thing that people, or at least myself, notice or pay attention to here is the number of projects that you're actively involved in. So I guess the first question that would pop to mind here is how do you even manage that? Like, well, what's the strategy to know what project to proceed on and what project to park and so on and so forth?
Yeah, that's a very good question, and I think one that I very much look forward to answering. I guess the answer, first of all, is we have to do it judiciously, and to understand the management policies, you have to understand the Yukon staking regulations to some degree. In Yukon, to hold a mineral claim, you have to spend a minimum of $100 per year to hold that claim. But you're able to bank up to 4 years in any 1 year. So in other words, if you had one mineral claim and you did $400 worth of work on it, you could get 4 years of assessment credit carried forward on the claim. And if you did the same thing next year, you'd build it up, and now you'd have 7 years of carried forward value. One is lost because of the current expiry year, but 3 more carried forward. If you do it again, then you have 10 years carried forward. So if you make expenditures that don't exceed that 4 times amount, then over time you can build up very substantial assessment credits on your claim blocks. So that's one of the reasons we don't want to jump into large drill programs, and why many people have looked at our claim blocks and say, why aren't they more aggressive? That's a great looking project. Well, the answer is if we spend too much money, then a lot of our expenditures are lost. You don't get those assessment benefits. So each year we have to look at what's coming due for assessment and decide, does it justify additional work? Sometimes we say, no, that project really isn't up to our standards, we'll let it go. More frequently, we'll say, yes, we'll work on it. And then the decision is, how much work do we do? Do we do enough to keep it for 1 year, 2 years, 3 years, or 4 years? Rarely do we want to put on more than 4 years, as I said before. So we have about 12,000 claims in Yukon territory, which is where the majority are. There's a very small number in the Northwest Territories and a few in BC, but almost all are in Yukon. So, if you think about it, that would work out to, 1.2 million each year to hold those claims if you had to do $100 in each one. Mm-hmm. But fortunately, over time, we've built up assessment credit on a lot of them. So many of our claim blocks are held for 10 years or more from now. So the number that actually come up for work in any given season is generally quite small. And this year, for example, we're spending about $600,000 in total to keep, and that'll keep all of our claims that we currently have in good standing for this current year.
Good question. I appreciate it. That's one that I was also looking forward to. I was hoping that you would also mention the team and how that works, because what I'm wondering here, let me get more with a more direct question maybe. How can you have all the skills needed, though, to recognize potential in a copper porphyry project in the Yukon while also recognizing a gold oxide or whatever, abandoned iron formation potential in BC, and maybe, I don't know, a sediment hosted or a carbonate cobalt deposit in the Northwestern Territories? How can you, because your team is not huge, so how can you make that work?
Yeah, that's a good point. The team isn't huge, and in fact, we Strategic manages its corporate overhead in a very again, I think, unusual way. We have no employees. I'm a contractor to the company. Every single person who's part of our key management team is a contractor. So we have no employee benefits that we pay. We work on an as-needed basis, so there's not a huge carry forward commitment. None of us have contracts that can't be eliminated in a few months' time, basically 1 month's notice, and we're out the door. So we keep our overhead very, very low. But that said, I've spent 50 years in mineral exploration in the areas that we have our claims. I used to run the largest consulting company in that area. I retired just last year. And over that time, I built up a lot of personal knowledge. The company, we still have very close association with that consulting group. They have probably the second largest private database in Western Canada, so that we were able to mine that database looking for good ideas. And we still have access to that consulting group and the geologic knowledge that's there. And they have quite a large geologic staff. So if I have questions about a particular project or a particular target that we might want to explore, not only can I look at my own experience and my own knowledge, I can look at the databases and see if there's anything that we know about it that's documented. And finally, I can ask the other people in the group if they have personal knowledge. So it gives us, there's quite a multiplier effect in that. And in fact, one of the slogans that we use is creating wealth through knowledge. And that's really the bottom line as a project generator. That's how you create value, is looking for opportunities that other people may have not have appreciated or overlooked or forgotten, or in some cases had to walk away from just because they didn't have the money to maintain it, and then use our access to capital and our knowledge to reacquire it really cheaply, advance it, and then hopefully move it on to another party who wants to take the higher risks of advanced exploration.
So what about you specifically? What do you do? Like, what is your day job, basically, I guess? What is the day of a man with 100 projects and a few companies under his belt? What does that look like?
It looks like a lot of phone calls talking to people who might be looking for projects, a lot of phone calls to other people in the group, making sure that I understand progress that maybe it's being made on projects, or lack of progress, if that's the appropriate response. Um, and periodically research time, just looking if something looks interesting. One of the things I do, for example, is every 6 months or so, I ask our IT specialist to run me off a map of all the claims that are going to expire in the areas that we explore in the next 6 months or so, and then I'll look through those and see if there's anything that's expected to expire that I think is really prospective. And if there is, then it goes on a watch list, and we count down the days till it's due to expire. And if it's still open on the expiry date, we may send a crew out to pick up new claims for us. Similarly, we're constantly monitoring activity by other companies working in the immediate vicinity of where, and frankly around the world, trying to keep abreast of significant developments that they may or may not have made. A lot of my time is spent. I'm a director of CEO of strategic, and of also one of our subsidiaries, GGL Resources. But I'm a director of Broden. I'm also a director of Silver Range, which is another project generator. It was one of our spin-out companies that we dividended shares to our shareholders for. They're a project generator as well, but they're looking at jurisdictions that we don't normally focus on. Nevada, Northwest Territories, and Nunavut. Gives us a multiplier effect. We've got about 18% of their shares, so if they're successful, we can benefit from their efforts. And I'm also a director of Rockhaven Resources, a company that's moving toward production. They're working on completing their pre-feasibility now, which will allow them to enter permitting. So, through our share interest, we've got exposure to some other early stage explorers, but also some companies that are much more advanced than we would normally take approach.
So what should I write down is like, Doug doesn't sleep. That's pretty much the conclusion here.
Doug does like to sleep, but a lot of his best ideas happen when he wakes up at 2 o'clock in the morning, when you remember something that maybe was in the back of your mind, but didn't ever really get the proper attention. Or ironically, some of my dreams involve projects that I work on, and suddenly I would say, wow, that was actually more interesting than I remembered it. And so even when you're asleep, there's some good things can happen.
Fair enough. How do you think about deals in different markets then? I understand how you think about deals in different times of the day, and it makes sense. But what about different markets? I mean, how do you determine what a deal should look like? And as if, if you were to do a deal right now, being low on cash, well, you're not super low on cash right now. You don't necessarily have to raise money, if I understand it correctly. But would if you were to do a deal right now, would you demand more cash, given that it's hard to raise cash, or would you try to keep more of the
Yeah, it's pretty hard. It's pretty hard to raise money, cash right now for most of the juniors. Right now, we happen to be negotiating some deals, so it's a good question. It really depends who you're dealing with to some degree. If you're dealing with a junior, yeah, you hit the nail on the head. It's hard for a junior to raise money right now. So what we would probably be looking for would be one of two models. Outright sale, and in that case, we would probably ask, depending on the structure of the company, what else it has in its portfolio, the quality of the project we're selling, somewhere between 9 and 20%, 19.9, and being an upside cap of the shares of the company. May or may not ask for any cash payments. If we did, they'd probably be back end loaded, so that the more significant money didn't hit the table until years 3 or 4 or something. And an NSR, it might be 1%. If it was a commodity that was had a lot of costs associated with it, but if it's something like gold, it could be as much as 3%. Really kind of depends on the project. So that's one model, an outright sale to a junior. A second model would be an option to a junior, and we've done a number of those in the last few years. Typically, again, it depends on the project, but a couple that we've done recently involve porphyries, which require a lot of work to get them to the point where you really know what you have. So we're asking between $5 and $15 million of work. And because we're asking for a fairly heavy work commitment, and we want to keep an equity interest, so we're looking to keep somewhere between 30 and 40% of the project once they've made that expenditure. You can't ask for a lot of cash payments or shares in a deal like that. There might be some modest ones to cover, the cost of papering the deal and sort of maintaining the claims and whatnot. But basically, there you'd be looking for large work expenditures by the junior, usually staged over 3 to 4 years. And at the end of the day, either they earn in and a JV is formed, which opens up all kinds of opportunities again, or they drop it and you get it back 100%, which is not a bad outcome after they spent a lot of work. Usually they haven't killed the project, and so you're able to put it back in the portfolio and potentially do another deal later on it. But even if they do kill it, it means you haven't suffered all that dilution for all that work that they did to prove that it wasn't viable. If you hit the JV point, then you have the ability to either sell your equity interest to another company, maintain that equity interest if the project is really exciting by spending some of your own money, converting that equity interest into shares, or just diluting and going to an NSR. So you're still protected long term. So that's the second model, optioning out to a junior. And then the third one involves majors. And again, different projects. There's one we're talking to a major who wants to buy a project outright. Well, we'll have to see what they're willing to pay for it. Mm. There's another opportunity where we're talking to majors, which is where they farm in an option like the other juniors. And in that case, because it's a major and they're not quite so concerned about cash, it's probably a combination of cash and cash payments and large expenditures on the project. Again, likely ending up in a JV with us holding 30 to 40% of the project. And so I think those are the main ones. There's other possibilities, but we definitely don't want to do anything that involves any kind of convertible debentures or anything. Those are a trap for a junior. Any junior who enters into them, to my way of thinking, it shows inexperience with management. The probability of it working out well is very low, unfortunately.
Oh, for sure. That can quickly become a death spiral, if you will, for a junior. So, I mean, I guess being in business for 20 years does teach you one or two things. I mean, you're in business. I mean, this company's in business for 20 years. You're probably in business for a lot longer. Not that I want to date you, but I assume you started as
more than 50 years. So I like to think that over my career, which started in geology in 1971, I definitely have made some good decisions and some bad decisions, and I'd like to think that I'm going to try to avoid as many of the bad ones as I can in the future and maximize the good ones. So it gives you a pretty good understanding of the type of deal you can do. And again, the key to any bargain, you could be a project generator, but if you're asking deals that are too tough, then you're not going to do very many deals, or you'll do a deal maybe one time, but people will be very reluctant to deal with you again. So you have to look for win-win situations. By the same token, if you're a project generator and you're giving away your properties too cheaply, or selling them in markets where the market is depressed, or have to sell them in markets where the money is incredibly tight, and you're doing very bad deals, then you're likely to go out of business fairly quickly. And that's where we've been lucky. We've been able to acquire projects when others are having to dispose of them, and we've been able to make most of our sales in stronger markets when commodity prices are reasonably strong. And I think we're with the talk of the recession disappearing. There's metal prices as a whole are quite robust right now. I think that especially the metals, some of the critical metals, and most importantly copper. I think prices will go up in the next few years as there's a little bit of economic recovery, and electrification becomes even more significant than it already is. And we're ramping up our deal making. We've got very good leverage to our shareholdings. If some of the companies perform like we think they could, that's going to be incredibly accretive to our bottom line. We may be able to dividend out shares again to our shareholders the way we have in the past, and deliver money right back into their pockets directly. We've even got a couple opportunities that I've got potential to pay dividends. One notably is a private company that we have shares in that is actually a company I founded, a company called Terra CO2. They're working on alternatives to Portland cement. And two main business branches. One where they're providing the supplemental material that gets added to cement when concrete is done. People don't realize it. They think that concrete is just cement and various aggregates. And in actual fact, in most cases, there's other material that's added to the cement to help with the binding, but also to stretch it if you want. You use less of the cement, and fly ash is the most common one that's used. This company Terra CO2 is working on alternatives to fly ash that can be generated in a cost-effective manner. And fly ash is becoming increasingly rare as coal plants shut down, and where there's large amounts of it stored. You're looking at fairly significant transportation costs to get it to the market. So being able to produce it on site at low cost is important, because somewhere between 10 and 40% of cement are these supplemental materials. So that's one business line. Their main one, though, which I think is a potential huge game changer for the concrete industry, is a complete replacement for Portland cement. And what makes that product attractive, or their product attractive, is first, it's cost competitive again, and secondly, it's the production of it requires or produces about half the CO2 that conventional cement production does. And it's an idea that's got come a long way since we formed the company. They've got a number of key patents. They're getting close to commercial production. They expect to hit that milestone early next year. They've got great independent management. The fellow who's running the company is a CEO with a great deal of experience in the cement industry. In fact, sold one of the projects he had for a couple $2 billion to Lafarge. So he's done it before. They've got a lot of major investors who come in and put big money up to move this project forward. One of the most significant, or the most significant, is Breakthrough Energy, the big innovator that Bill Gates created. They're the largest shareholder in Terra CO2. One of their requirements is each technology that they invest in has to have the ability to reduce global CO2 emissions by at least 0.5%. If Terra's technology were implemented across the board, it could reduce CO2 emissions by as much as 4% worldwide. That's pretty significant. It's also people don't realize, but the cement industry is bigger than the worldwide metals industry, and it's an enormous sector. So if Terra can be a disruptor there, the upside is phenomenal. We're believe it or not, we've got 11.7% right now of the company's common shares. The company shares, and we've got warrants that would bring us up to around 17%. Beyond Breakthrough Energy and Strategic, the largest shareholders are Rio Tinto and Lennox, the big home builder in the States. So we're running with a pretty big herd of elephants on this one.
What's the criteria there, by the way, for your public holdings, I guess, basically what's the criteria to monetize one of those positions and then dividend that out or reinvest into the business? So
yeah, okay.
How do you know when to sell?
Well, that's a good question. I think that right now there's two ways you can sell. One is if you have a project which reaches a critical momentum and you're taken out along with all the other shareholders for a takeover. So I think that a company like Terra CO2, which is still private, I think there's a very good chance that it would be taken out by an industry leader in the cement industry before we ever go public. I don't know. I am not part of the management team there, but I think that that's a very reasonable outcome for that company. The other is they could just continue to grow and build their plants, and I think at that point it would create a dividend stream for Strategic. A company like Broden, again, I think there'll be a liquidity event when they go public, which I think will happen very soon after this thing a deal gets signed. That would create all kinds of opportunities for us. We could dividend some shares to our shareholders. We could sell some of the stock and use it for working capital. But again, I think that project is tailor-made for a major. I think that you'd see one of the larger lead zinc producers step in and take the company out. Probably when they complete a feasibility, which would take a couple of years after they go public. So, I think there's a chance again of a takeover there. Rockhaven Resources, we're working on a high-grade gold silver vein system in central Yukon. They're going to have a PEA early next year. Not PEA, pre-feasibility early next year. They're road accessible. The local First Nations are really supportive. With that pre-feasibility, they can enter the permitting stream. And I think if they can show that there aren't major obstacles to permitting, I think that they're vastly undervalued. And I think that you'll see someone come after them as well. So again, we could have an instantaneous liquidity event that involves all of our shares rather than having to sell them out piecemeal. So other ones, if we have an opportunity, the market's robust and there's good liquidity, we're not in love with our shares. We'll dribble some out. We've sold shares in other companies in the past, and but a key parameters, we don't want to destroy the market for companies that we hold shares in. We want to do it in a logical way that works with their business model as well as others.
Well, that makes sense. So you're basically saying that you like selling when you like selling and not when you're necessitated to do so. So I guess, do you expect having to do that this year, maybe next year, or do you think you have sufficient cash to keep on?
No, we're in good shape. We have a burn rate that's around $750,000 a year, and that covers everything except in the exploration. As I said, our exploration this year is about $600,000.
That's not a lot.
Yeah, but on top of that, we the various options that we have this year came very close to paying our working capital, and because of some of those escalator clauses we talked about before, if they're maintained next year, they'll be quite a bit higher than our burn rate for administrative purposes. So, we've got enough cash still to get through next year or so without any issues whatsoever, and I think that we'll be having new funds coming in. So I don't think we're going to be forced into any kind of fire sale of assets in the near term.
Okay. Well, you do have your own project. You're currently drilling at the Min Porphyry Copper project in the Yukon, if I'm not mistaken. How much money is going to go there? I'm basically trying to figure out how much money you're going to have by the end of the year.
Oh, okay. Yeah, Mint, about, we had some flow through money that we raised last year at 60 cents.
Yeah.
And because it was focused on, as a charity, we're actually the first company in Canada to do a critical metals charity flow through, which gives you the maximum premiums you can get on a sale of shares. Um, because we had money left over from that, we had to spend about $500,000, and we spent that, or will spend about that at Mint. Other than that, our expenditures are modest. We've got some work we're doing in the Tombstone Gold Belt on some of our projects, moving those forward. I think that given some of the success that other companies in that belt are having, I think we're going to do some pretty good deals on some of those. We've still got 12 wholly owned projects in that belt, and I've already either optioned or sold a number of others. So we've got a lot of leverage. For people who aren't aware of what I'm talking about, the Tombstone Gold Belt, it's an important belt of rocks that runs through Yukon and into Alaska. It's offset by a major post-mineralization fault called the Dena Fault. In Alaska, the best known deposit is the Fairbanks gold mine, which Kinross has been operating for, oh gosh, 20 years, I guess, or more. Produced 6-7 million ounces already, and is still going strong. In Yukon, the Brewery Creek mine near Dawson was part of that belt, and more importantly, now the Eagle mine, which Victoria Gold is operating, is of that style. It's best known for the gold occurrences, but it's also the same systems are related to one of the most important silver districts in Canada, the Keno Hill district, which is the second largest primary silver producer in Canada. And it's very close to the Eagle mine. Other players that are active in there right now, there's a couple deposits west of Victoria Gold, the RC and the Florentine, which are both over 1 million ounce deposits. As you move closer to Keno Hill and Victoria Gold, Banyan's proven up over 6 million ounces in the last few years. And jumping out to the east, probably the one that's the most a market darling at the present time, and with good reason, is Snowline, where the Rogue deposit, where they've made a spectacular discovery. It's hundreds of meters of better than 0.1 gold in multiple holes, and some of them much better than that, up over 2 grams gold. The common thread in there are a belt of intrusive rocks that are about 95 million years old, and most of them are what in the category called reduced intrusions, and they include some of the largest gold deposits in the world. So we've got, as I said, a number of projects in that belt, and I think that we'll be doing deals on some of them. A couple specifically, the Mount Hinton project is right adjoining Keno Hill's ground and Banyan's ground. It's already a major vein occurrence with multiple very, very high grade gold silver veins on it. But it's also has potential for more bulk tonnage type target. And some of our other ones further to the east, closer to Snowline, Lance and Liam and some others there have shown very good early indications as well. So we decided to spend some money on them too. So, but again, we don't have a lot of holding costs this year. The biggest expense we're likely to incur is if we elect to exercise our warrants in TerraCO2, and if that happens, costs about 125,000. 1,250,000 Canadian. So we'll be down, under right around $1 million by year end. But as I said, I think we'll have good opportunities to top up the treasury, and I don't think we'll have pressure below that point.
Those good opportunities that you're talking about, does that include you doing charity flow through again? I mean, do you think you have the ability to do that?
Uh, I'd only do charity flow through if we see a spike in our share price and right now we don't, maybe before next season we would do it, but we wouldn't do it right now. I don't think. Sometimes some of the funds get desperate toward year end, and they'll often approach us because I think they view us as much lower risk than a lot of the other companies. So if we get the right opportunity, I won't say we won't raise some money that way, but and similarly, I won't ever say that we won't do an underwriting. If somebody offers me something at the right terms, I'll have to consider it. But we've got enough potential events here in the next little while that I'm not panicky right now about where our cash position is. We've got situations where I think we'll get some potential liquidity through some of our shares. Let's say we've got potential cash flow from our cash payments related to option deals we've done. We've got some negotiations relating to sale of some of the projects. So, and again, our exploration burn rate is low, so I think we're pretty healthy.
Okay, fair enough. I don't think we talked much about Rockhaven so far. They what are they expecting, a resource estimate or something along those lines? I'm not on it.
Yeah, okay. So they've already in past years have done a resource estimation. The most recent one that they did, which was there's been 3 drill programs done since then, was about 1.6 million ounces of gold equivalent in a combination of indicated and inferred, with 60% of that in the indicated category already. Obviously, the additional work they've done, some of it is being step-out work, which hopefully will result in an increase in the total number of ounces in indicated and inferred. But some of it was also infill, because in order to do a pre-feasibility, only the resources in the indicated category can be considered for that study. So anything that's still inferred isn't part of the economic study. The last economic work they did was a PEA that was done in 2020, and using $1,700 gold, and I'm sorry, I can't remember the exact numbers, but I think it was $20 silver. They had a more than $500 million NPV. The after-tax IRR was well up into the 30s, pushing the 40s. It was, quite a robust result. Since then, they've done a lot more advanced metallurgy. The drilling that they've done. I think the metallurgical work is nearing completion. I think there'll be some kind of release fairly soon, outlining some of those results. I think the indications I'm getting are that some of them are potentially very significant to project economics in a positive way. The resource estimation, again, I don't know what will come out of it, but I expect it'll grow to some degree. By what factor, I don't know. And then, as I said, the pre-feasibility will be done, anticipated to be done early next year. It was hoped that it would be done sometime in the fall, but the metallurgical work, the indications are that it was well, again, there's some very positive outcomes from some of it, that they had to follow through to completion before they could start doing their process design and feed that information into the models for resource estimation. And each of these things, unfortunately, takes longer, especially if you're getting favorable results. You don't want to do something with less than optimized potential. So they're taking a little bit longer and trying to get it right. So I'm very bullish on that one. Again, we own almost 70 million shares of the company. So there's pretty good leverage on it. That's about 30% of the shares they have outstanding. They're trading at a massive discount to a lot of their peers because I think there was some concern that the metallurgy was was unfavorable, and I don't think that those concerns are valid. And frankly, it runs the same problem that a lot of companies have, which is once they've been around for a number of years, they're old news. Investors don't want to go into them. They say, well, when's there going to be a liquidity event here? When are things going to move forward? I think we're right on the cusp of one for Rockhaven. I think that the pre-feasibility will de-risk the resource that much more. It'll show that they can actually, begin the permitting process. And I think at that point, typically projects that have got a pre-feasibility attached to them get a much higher valuation for the ounces in the ground than those with the PEA. So I think that their current share price only reflects I guess what I have to say is old news. So when we get the new results, I think there could be a fairly substantial increase in value there. So, and again, we're very well leveraged to their results. So we'll see what they come up with.
Market doesn't seem to like mineral resource estimates these days unless they're truly exceptional. And when I say like, I mean by the share price goes up.
No, it's frustrating. Years and years ago, when I was a much younger geologist, it seemed that the majors were much more willing to step into projects at the exploration stage and reward either take the company out or make very lucrative deals. Now the majors seem to be much more focused on taking over each other and building their resources through materials already in production, and only will open their war chest when they see, as I said, a really exceptional situation. And it unfortunately for the juniors, it's that's the payout in most cases. That's the major exit point for most investors is a takeout. Other than that, you're speculating. You're hoping that you get in early enough that you can, be exit while the company is still in the early stages of the Lassonge curve, on the way up. But because when you hit the top, unfortunately, the downside is often just as steep as the upside, and then you're in the situation that Rockhaven is in, where you're going through those many years of work, very patient, good work that has to be done to prove up a mine. And unfortunately, most investors don't want to put new money into a company at that point in the cycle, and it results in continual dilution as you do that kind of detailed infill drilling and engineering work that has to be done. And that's frankly one of the reasons that we don't strategic has stayed away from that part of the cycle, because unfortunately you could be successful and that could be a bad outcome for the shareholders. You can have a really good discovery and be moving it forward toward production, and unfortunately the share price just languishes for many years. So being a project generator and not generally getting into those kinds of sizable expenditures that result in really massive dilution is part of what makes our model work. We in the last 10 years we've suffered about 10% dilution, which is pretty uncommon. We've got not many more shares out now than we did then. You commented we don't have any warrants. Yeah, we generally don't like to attach warrants to our deals. They overhang the market. Our leverage right now, I think if we had something happen that was, well, you saw it in that short-term spike. If something very positive happens for either the company or for one of the companies we have large share interests in, it can be reflected in a very, very rapid increase in the share price, and on really modest volumes. And that's exactly what what happened last time. People just want to see some positive confirmation and or anticipate that, and it can move up pretty substantially pretty quickly.
But as far as I understand it, with Rockhaven specifically, you're not necessarily waiting for them to be taken out. I mean, if you need the money, you might be. You said you're not married to the deal, so.
No. If we saw a major liquidity event and it wasn't going to, someone approached Rockhaven and said, we'd love to do a cross of 10 million shares to get a position in the company. I think Rockhaven is smart enough to know that they could phone us and we might consider it. But again, I'm not going to sell it at 6 cents, which is where Rockhaven is today. My valuation on the company is much higher than that in terms of what I think it's worth. So, but again, if we see a substantial uptick, some interest on the pre-feasibility, then it's everything is for sale at the right price. It just determining what's a fair price.
Yeah, maybe a PFS. I've been thinking about that too. Maybe a PFS is not enough for a major to jump in, not with Rockhaven specifically, but just with other companies that I've been following and hoping for a takeout as well. Like, is a PFS even enough for a takeout these days? I don't know.
It would depend on where the company. Well, it'll depend on about 2 or 3 things. If the price of gold and silver, and that project's about 3/4 gold and 1/4 silver in terms of valuation. If they were really peaking at about the time that they came out, you might have a company that said, "Wow, there's a chance to pick up some easy ounces at far below what's been put into the project, and much below the NPV." Typically, a company that's got a pre-feasibility that's completed, and where access is not an issue, which is true of Rockhaven, it's really accessible now, and where there aren't overriding environmental concerns. And again, that isn't an issue at Rockhaven. It's a fairly brownfields operation. There's been lots of placer mining around the area, where the First Nations are not opposed to the project, and again, in this case, they're actively quite supportive of the project. Typically, you get about a 40% of NPV, and again, that assumes that you use a reasonable discount rate, which I'm sure they'll use 8%, which is pretty much the norm now. You haven't overvalued the commodities, and I don't think they will. I think you'll see it done on, I don't know. I'm not part of the study, but I'm guessing it'll be 1,800 gold, maybe 1,900, depending on where the projections look at that point. But I don't think it'll be done at an inflated price for it. You normally get about 40% of the NPV. Well, if you have a better than $500 million NPV, that's around $200 million. And in Rockhaven's case, they've got, even with their, on a fully diluted basis, they've got about 300,000 shares out, or 300 million shares out. That would still leave a share price of north of 60 cents a share, and right now there's 6. So you can see where I think there's some upside in this thing. And again, I think Rockhaven could be permitted. I made a comment many years ago, about 8 years ago now, that Rockhaven would be the next deposit developed in Yukon, next gold mine developed in Yukon after Victoria Gold. And after all that time, and there's been some pretty significant developments in the interim. You had the coffee deposit discovered by Canamak and sold to Goldfield initially, and then taken over by Newmont, and working toward production. And you've had the Banyan discovery, and Attack Resources had a big flirt. After all of the money that was spent, I'm still going to say the Rockhaven, I think, will be the next one developed in the Yukon, a gold mine. And the reason is that its footprint is a scale that isn't frightening to regulators or to the First Nation. It's got some small open pits, and then it's an underground deposit. It's high grade relative to most of the other deposits. And you've got the ability to, well, first of all, your surface disruption is fairly minimal, and you've got the potential to use the pits later on as reservoirs for some of the tailings. The sulfide bearing portion of the deposit is fairly modest, and I think most of the waste material will be self-buffering, relatively benign. I think you've got potential for good rolling reclamation, and I think you've got potential for a walk-away closure plant. In other words, you're not going to have perpetual monitoring and remediation going on to keep everything stable. So for all of those reasons, plus the fact that, as I said before, that it's essentially a brownfields area in terms of wildlife disturbance and access, it's got everything going for it compared to other companies' projects, which are by and large in much more sensitive areas, much more difficult to access areas. And I think the engineering here has been done pretty conservatively. They've spent about $40 million. Some of the other projects, Attack Resources spent over $100 million, and they were, never even got to the point where they could do a pre-feasibility. They'd be taken over now by Hecla in a pretty predatory transaction that really didn't do much for the shareholders. I don't know how many hundreds of millions of dollars have been spent at coffee, and it's getting smaller and smaller every time they do a new resource estimation on it. It gets smaller. It's way too small for Newmont to develop it. White Gold is, has gone out and moved that project ahead, and they're still stalled at about the same size deposit as Rockhaven, but in multiple deposits scattered around, so it's not nearly as attractive. I think the end of the Rockhaven team has done a very good job. I know they have the cheapest drill costs. Attack's drill costs when they were working out on their project were well over $500 a meter. Snowline now, if I'm not mistaken, they said their cost last year were $800 a meter. Rockhaven, most of their drilling was done for right on $200 a meter. That's pretty remarkable. So, it's wide open. The current resource that's there, as I said, is going to be updated, but the deposit's wide open all the way along the bottom. There are other vein structures that they haven't drilled off yet. They could bring into resources, and they've only explored about 10% of their property. There's all kinds of exploration potential there still. So, a mid-tier, I think it's too small for a major, but a mid-tier looking to add about 100,000 ounces of gold production per year to their portfolio, with the idea that it's going to be a very long-lived mine. Most vein occurrences that are open like Rockhaven is will have 20-year to 50-year mine lives. People keep finding more and more. The pre-feasibility won't consider that because with an 8% discount rate, everything after year 8 is valueless. So there's not really any point in drilling off all the inferred resources that are there. But I think someone who's looking to add some ounces in the near term and have really good exploration long term is going to be prepared to take that project on and probably pay up to get it. So that's why I like it.
I like the Yukon. I don't know if it's just me or not. I'm pretty inexperienced. I think I started 2 or 3 years ago in the sector, but since I started, the Yukon has really been there's been a lot of stuff going on. I mean, you have Fireweed Zinc over there doing really nice stuff. I think actually you have a property very close to them, if I'm not mistaken.
Yeah. Well, if you look at the Fireweed Zinc map, we're the only company that has claims right within the area of their zinc deposit, and we have zinc showings on our ground, never been drilled. I think it's a large enough claim block that it could host something fairly significant. It's only a few kilometers from their new boundary discovery, so it's really well located.
What's the plan there?
We got our what's the plan? Got to find the right company, somebody who wants to drill some holes. There's nothing else I think you can really do in there except do some drilling. And I think that at some point, if zinc takes off again, which it probably will as economic activity picks up, I think we'll probably find someone who wants to drill it. Fireweed may come to us yet and say, we really want that piece of ground too. Although, again, they've got a huge claim block. They got all they can do to explore their own ground. But if we weren't so involved with Broden, I'd probably push ahead on it. But it's not the only really good zinc project we have. We've got another one over closer to Mayo, right adjoining what's now Hecla's ground, that we were able to last year stake some claims that I've been watching for over 40 years. They came open. The modest resource on it, historic resource of about a million tons of 23% combined lead, zinc, and pretty good silver. But that's part of an 8 kilometer long belt of carbonate replacement deposits that we've got all the other ones along the belt already. So I think that's another area that I think we'll do a deal on someday. That there'll be a company that wants high grade zinc and with very, very good wall rocks, and I think that project's well suited for it. And we've got others. So you said earlier that we've got very diverse. We've got just about every commodity you can think of, and we try not to specialize on one commodity, because if it goes out of favor you can wait many years for it to come back into favor. Whereas having a really broad spectrum means that we've always got something for sale that someone's interested in.
Sure. Yeah. I guess that makes sense in terms of a long-term strategy too. I've been watching that claim block that you have up there with Fireweed, and I've been thinking about it. As I said, there's a lot of forward-looking statements in this conversation. But have you spoken to Brandon? Are you guys talking or something like that?
They made an approach a couple of years ago to us, and we talked briefly about it. We could have done a deal at the time, but in hindsight, I'm glad we didn't, because their offer would have been a pretty low ball offer, given what was known about the camp at that time. Their new boundary discovery really helps. It showed that there are fairly significant. In fact, the boundary holes are the best one that have ever been drilled in that camp. It shows there's lots more to be discovered, different styles of mineralization. I think their models are evolving. The mineralization that we've got on our ground is much more similar to the boundary ground than it was the original Tom and Jason deposits. It's brecciated rocks that are very barium rich. So we're I think the value of those claims have gone up, pretty substantially because of the work that Fireweed's done. And again, our holding costs on it are $4,000 a year, or thereabouts. So it's we went in and did a little bit of work last year, and moved it ahead a little bit more, put 4 more years of assessment on it. So we're in no super rush to do a deal. We'll do a deal when the right deal's on the table.
Doug, do you ever get tired? I've asked you questions on different properties and different companies. You have a ready answer. I don't share questions up in advance, so you didn't know what I was going to ask, and then you have a ready answer for everything. How do you keep that in your head?
I'm probably very lucky I have a good memory. So I think that's the best answer I can give you. It's one of my former partners and I, Al Archer, who formed Archer Catherine Associates, and who I worked with for many, many years until he retired. We used to have arguments about rocks that we'd seen 20 or 30 years before, and we both would remember the rock perfectly. We would have arguments maybe about how it was formed or something, but he somehow managed to communicate to me the importance of remembering assay values and remembering certain characteristics of rocks and mineral deposits, and eliminating what wasn't essential and remembering what was important. So I think I do a fairly good job of that.
Have you? But why? Why did you keep doing this? I mean, you've been in the sector for 50 years. You said, let's assume you started when you were 5. You're about 55 now, I assume. So why keep doing?
I'm older than that, but close. Anyway, why do I do it? I do it because well, to some degree, I've got shareholders, and I am a large shareholder myself, so I like to create value first. But it's like a good hobby. It's something that as my body has become a little bit older, it doesn't mean my mind has necessarily, and I'm able to use young geologists and field workers that use their energy by directing them a little bit more than where before I might have tried to do it hands-on myself. Now I have to give good instruction to what I want done. But it's like playing three-dimensional chess. It's a very complex business. You're balancing a lot of balls of mineral potential against costs, and it just keeps my mind very active. And I find that I still get up most mornings and say, "Wow, what's on the agenda today?" And in most cases, I'll really look forward to what I think I can accomplish. So as long as I still feel enthusiastic and you still get the rewards periodically for the efforts you put in. It's something I'd like to continue to do. But that said, with the consulting company, I created a very good system of younger people. I brought in different sets of younger partners. The consulting group, I was in the second generation geologists. Al Archer and Bob Cathler formed the company. I was in the second generation. My partners from that retired many years ago. The third generation, my partner from that retired. The fourth generation, most of the partners from that are still active in the company, and there's a fifth generation there already. So, we've been able to create something that's self-sustaining, which is always enjoyable, and so it's being able to create continuity is important. And I think that the companies that I'm involved with now, if something were to happen with my health, I'm very confident that the people that I'm associated with could take on what I'm doing and do very, very well with it. I think I would say I have a formal succession plan, but I think the informal plan is quite sufficient to ensure that the company will move forward if something happens to me.
I'm happy to hear that, because you're clearly the lifeline of the company right now. I mean, I talk to a lot of people, and I don't know many people that would be able to manage it the way you do and know all the properties, and know what's going on and do all that. So it's important to know who you're working with, and that would have been one of my questions. Like, what happens when when you want to do less, and when you want to take a step back maybe and watch from side who takes over and who's going to manage the company.
Well, one of the things that I've always strive for is that in picking people that I want to work with and people I bring into the group, there's two things that I look for. The first is raw intelligence. I don't care what credentials somebody has. If I can see that they're very, very bright, then I know that they're going to be able to pick up whatever it is we're working on, whether it's the geology or the business models. That intelligence is really, really important, and that's something you can't teach people. You can educate them if they've got the right intelligence and are good enough self-starters to make it worth putting in the time to teach them what they need to know. But you can't teach intelligence. The second thing I don't think you can teach you, there's loyalty. And you don't want to put a lot of effort into moving people forward if they're going to bail on you, at the first time they're offered another chance. And I think I've been pretty successful in my career in finding really good people with the consulting company and with the junior companies we're involved with, where both of those traits are there, the intelligence and the loyalty. And that's why I'm confident that the people that are there now, could take over what I built and continue the company forward and continue to build. And that's it's all about the quality of people and the information and how you use knowledge, because that's what's really important.
It's a good answer. I like it. Intelligence and loyalty. Those are two things that I guess you really can teach. Yeah, we've talked about a lot of stuff. What am I forgetting to ask? What's something you came here hoping to talk about, but I'm failing to bring up? There's a lot.
Well, yeah, no, there's a lot. I think that the main thing, just to close off, there's at least three companies. I think I could probably put four on the list that really bear watching. Two of them are private still, but each one of them could be a game changer for strategic. And those are Rockhaven, which we talked a fair amount about, GGL, which is working on a gold district in Nevada, which is a former producer on it, but they've just found a porphyry. And I think that company, with some continued success could really add a lot of value to strategic. We own 34% of the company at the present time. So they're, it's well leveraged to go forward. Broden, that's a big deal. And Terra CO2, which I can't even quantify what that thing could be worth. If they become the disruptor that they're capable of being, it could be worth BHP's market cap. I don't know. The cement industry is enormous, and they have the potential, given current concerns about global warming, they have the potential to make the greatest impact, I think, in one sector that, of anything I'm aware of. CO2 produces about 8% of global CO2 emissions annually, and they could have that, which that's a big step in the right direction. And it doesn't have to be done with by introducing complex new technologies. A lot of adaptive kilns can be modified to use their process. It's something that makes so much sense that I think that if it catches fire, it could explode and become a really big deal. And again, some of the people behind it are the kind of visionaries who've been successful before. So I'd like to think that with Bill Gates and his team and the people at Rio Tinto, I don't think we're dealing with dummies here. So I think there's at least four huge leverages in their shareholdings, and we put only a small fraction of our properties in play. Right now, we've got, between options and royalty interest, I think we're sitting at about 24, 25. No, sorry, 30 something. So, but I think we're going to, increase that substantially in the next few months. So, I think the organic growth of the company could be very, very substantial as well. So, there's just a lot of drivers. So, it's a difficult time in the market, but I think if people are patient and judicious in their investments, I don't see a lot more downside, I guess is what I'm saying. And I think that for the first time in a while, I think the upside vastly outweighs the downside potential, at least in our shares, Doug. And I think in the industry as a whole. So there you go.
Well, there's your forward-looking statements there as well. If we ever heard any, it's what do you think? Because you said the shareholders should be patient. What's the next news release that you think they should be patient for?
I think you'll probably see some from us organically first, but with other deals we do or whatever. But it's really hard. I'd love to say that Broden will be done before the pre-feasibility for Rockhaven. Hopefully it will. I can't predict the timing on Terra CO2. I think that's just going to come up out of deep water when something happens. If it's a takeover bid, I don't know. Certainly they'll move ahead incrementally as they put their plants in production, but where it'll suddenly catch fire or go public, I'm not part of management there, so I can't predict that one. Again, GGL is probably on a very similar timeline to Rockhaven, to the point where they'll be doing drilling that I think would potentially be a game changer for that company. So early next year, I would guess would be a good timeline for something, but it could happen soon.
There's a lot of moving particles as always. So this was really a good conversation. I really appreciate talking to you, and thank you so much for taking the time to talk to me.
Well, you're very, very welcome, and I hope the shareholders take your first comments to very much. Your advice is very sound. Be careful. Take a good look at your investments and manage your risk, because it is a sector that there are a lot of risks in. But fortunately, periodically, the rewards are enormous too. So that's what we're all hoping for.